It's 9:30. We'll get started. Madam Clerk, roll call, please.
Each member is acknowledging that they're attending the meeting via Zoom and that they are located in Wayne County, Michigan, unless otherwise stated when I call your name. Commissioner Colleen. Commissioner Dobb.
Here.
Commissioner Clark-Holman.
Here.
Commissioner Kniezek.
Here.
Chair Basham.
Here.
You have a quorum present.
Colleen just made it in.
Thank you.
Thank you.
Okay, next item, Madam Clerk.
Chair's remarks.
None that I can share at this meeting. Thank you.
C, approval of the August 11th, 2021 meeting minutes.
Can I get a motion?
I'll move their approval, Mr. Chair.
Support.
Been moved and supported. Any discussion? All those in favor?
Aye.
All those opposed? Item passes. Next item.
D, unfinished business. Item 1, communication from Marcella Cora, Wayne County Legislative Auditor General, forwarding the final copy of the Office of Legislative Auditor General's Performance Audit Report on the Wayne County Treasurer's Office forfeiture, foreclosure, and auction process.
Well, I'd like to welcome our Auditor General, her staff, her guest, and any remarks that she might have to say. Well, welcome, Ms. Cora, and please introduce your guest and staff.
Sure. Marcy Cora, Auditor General. If staff could introduce himself first.
Will Hamner, Audit Manager.
John Kellett, Supervisory Auditor.
Tequila Allen, Principal Senior Auditor.
Erica Jones, Senior Auditor.
And we have representatives from the Treasurer's Office, if they could introduce themselves.
Good morning, I'm Jean-Pierre Adams, Chief Deputy Treasurer, and I'll allow my team to introduce themselves. We can start with James Berry.
Good morning, everyone. James Berry, Deputy Treasurer, Forfeiture and Foreclosure.
Good morning, everyone. Tony Cavalli, Assistant Deputy Treasurer, Forfeiture and Foreclosure.
Well, welcome, everybody. Please proceed, Ms. Cora.
What we have before us today, we started this presentation about 4 weeks ago. Just want to give a little background. This engagement was the result of a request from the CEO of a referral to the Ethics Board for how some properties were treated. So we were requested to look at the Treasurer's Office or forfeiture, foreclosure, and auction process to see if there's any way that enhancements could be made to policies and procedures, and to provide some assurance that there was transparency for all property owners, that all property owners were being treated fair and equitable. So that's just a little background. This never was any type of an investigation, but merely to see if we could enhance policies and procedures. So that's just a little background. I know they're going to get into the presentation. We'll start where we had left off. If John wants to, Cheryl, if you could share the PowerPoint so John can take over.
Okay. All right, we're going to start on slide 15 where we left off, and I'll turn it over right now to Tequila Allen.
Good morning. Enhanced business practices to prevent foreclosures on pages 15 through 17 of the report. We performed an analysis to determine if enhanced business practices or outreach measures could have been taken in an effort to assist the Wayne County Treasurer's Office in preventing property foreclosures. We reviewed the tax delinquent amounts before penalties, fees, and interest for 4,161 Wayne County properties foreclosed in 2018. Based on our analysis, 2,031 properties, or 49%, had original delinquent tax before penalties, fees, and interest under $1,500. We attempted to quantify the number of owner-occupied properties with delinquencies under $1,500. However, the WCTO was unable to provide the information due to a programming change in the PTA system. We assert with additional efforts adopted during the first year of delinquency, targeting this group of taxpayers owing less than $1,500, the WCTO may further help prevent foreclosures. Recommendation 5, a control deficiency. We recommend management within the WCTO enhances business practices by developing a policy and procedure to address the following. Identify owner-occupied properties with tax delinquencies under a certain amount as stipulated by the treasurer when property taxes are returned delinquent to the county. Develop outreach measures to contact the identified taxpayers during the first year of delinquency prior to the forfeiture of the property and provide the taxpayers options for resolving tax delinquencies, and document all efforts taken by the treasurer's office to resolve the tax delinquencies of owner-occupied homes with moderately low outstanding tax delinquencies and report on its outcome. Management disagreed with the recommendation.
Please proceed.
Okay. Okay, so moving on, our next area, I'm going to take this one. Our next area of concern dealt with payments that are received by mail are not logged and tracked. This can be found on pages 17 through 18 of the report. Here, we had held discussions and inquiries with the Treasurer's Office personnel in order to assess processes and controls for mail-in tax payments. And based on our discussions, we noted some exceptions. Tax payments received through first-class mail are not scanned due to not having a barcode. Only parcels received through UPS and FedEx are being scanned and tracked. And then tax payments received by mail are not recorded in a log prior to drop off at the cashier's department. And mail-in checks are not endorsed for deposit only upon receipt at the mailroom. So without developing a tracking mechanism for tax payments received through first-class mail, there is an increased risk that property tax payments may not be properly accounted for. Also, when these checks are not restrictively endorsed or cash is received and not properly logged with supporting information immediately upon receipt, the risk of misappropriation of tax payments increases. So therefore, under recommendation number 6, we identified this as a control deficiency. To minimize the risk associated with mail-in tax payments, we recommend management within the Treasurer's Office perform the following 4 functions. A, implement procedures for receiving and tracking tax payments received through the mail. At a minimum, the individual opening the mail should log all cash received in the mail. B, a supervisor or someone segregated from opening the mail use the tracking log or similar mechanism and trace the payments to the PTA system. C, the mail division should restrictively endorse all checks received for processing prior to forwarding them to the cashiering division. And then finally, D, the cashier supervisor should maintain a list of tax payments received that cannot be immediately identified to a taxpayer or parcel ID and establish follow-up procedures to alleviate the untimely recording of tax payments. And management agreed with this recommendation. And I'll turn it over to Erica Jones for the next issue.
Yes. Next, we had concerns in regards to the monitoring and review of property tax payments in the PTA system. This is covered on pages 18 through 20 of the audit report. We perform an assessment of the processing of tax payment cancellations and reapplications in the property tax administration system. We know that cancellation and reapplication of tax payments occurred upon notification from the taxpayer that a payment was not applied correctly. The original transaction is canceled and then the correct payment amount is reapplied to the parcel ID. We selected a test sample of 30 payment cancellations that were processed in 2018. Based on our assessment, we determined the following. We found no evidence that policies for processing and approving canceled and reapplied tax payments had been formalized by management. We also noted that 17 cancellations and reapplication of payments did not have evidence that the Wayne County Treasurer's Office management reviewed and approved the transactions prior to processing. We also found that several transactions were processed by a clerk assigned to a manager without managerial sign-off. Management also stated that a management sign-off procedure will need to be implemented. We believe that the lack of obtaining a manager or supervisor review and approval for cancel and reapply payments bypasses the delegation of authority to approve transactions and negates a proper segregation of duties, which could increase the likelihood of inaccurate posting of property tax payments. For recommendation 7, we believe to mitigate risks related to the processing of cancel and reapply tax payments in the PTA system, we recommend management to establish a policy for processing cancel and reapply tax payments in order to define established authority for approving these transactions, as well to ensure consistency within the transaction process. Also, we believe that management should conduct periodic reviews to ensure that established policy and procedures are adhered to validate the accuracy and timeliness of cancel and reapplied payments in the PTA system. And lastly, we believe that management should ensure that their review of cancel and reapplied transactions is documented within the PTA system that approves the transactions. Management disagreed with these recommendations.
And can I get a comment from management? But the thing of it is, this is so that this is for not just what happened. This is for going down the road, how we can improve the system and make it, you know, a better process for everybody. And so, can I have somebody from Treasurer's Office respond to this while they
Yes.
disagree?
This is Jean-Pierre Adams, Chief Deputy
Yes.
Treasurer.
Yes.
Okay, so we disagreed with the recommendation for a number of reasons. First of all, when they started down this path, they were talking about voided transactions, and we had to explain to them that these were not voided transactions and those procedures and policies didn't apply. So somewhere in the middle, we switched over into the reapplies. The reapplied payments are actually a correction of errors. And there are a limited number of personnel who are authorized to do these transactions. The one clerk works directly under the control of a manager who would then give her direction to input the reapply, the cancellation and the reapply. Those are checked daily or as they occur. We found no reason to introduce a policy for correcting errors, and the procedures that they referenced were related to voided transactions. It's not necessary that we document a procedure for correcting a transaction within the system. The system shows the correction itself. And as I stated earlier, there are only a limited number of people authorized to do this. The majority of them are managers. The one person who is not a manager is the clerk that's assigned directly to one of the managers who works under their authority. And we believe that there is sufficient control and that these recommended revisions are unnecessary. What we are trying to avoid is creating a hardship, additional work there's no error there. There's no violation of the 2 standards that they mentioned there. And so to do this would create an additional burden on our employees.
Well, before I ask for the auditor's response to that, this is not necessarily about an error. It's about preventing errors. It's about good practices and so on and so forth. So, could somebody from the Auditor General's office respond to that?
Will
Yes.
you respond?
Yeah, thank you. Yes, Chair. And so during the engagement, we asked for the policies and procedures related to this process. There were none. What had actually happened was we were provided the policy and procedures for the voiding of transactions. So when we reviewed that, we kind of came to the conclusion, okay, this doesn't apply to this particular area of function. However, what we did notice that within the cashier's voiding of transactions, there is a managerial sign-off process within that policy and procedure. So we said, okay, let's use that as a best business practice and apply a policy and procedure to the cancellation and reapplication of payments and use that same type of managerial sign-off. Within the report on page 19, I think management did indicate that the accounts clerks that were assigned to the manager that was accurate. However, a managerial sign-off will need to be implemented. So we were, that's moving in the right direction, the corrective action there.
So if we're moving in the right direction, why would management disagree with the recommendations?
I don't recall that we ever agreed to that because typically a manager does sign off. They found a few, and I don't know how many, I would say 2 documents where the manager had not initialed it. So there is a process in place for managerial review.
So,
It won't be shown in PTA. We would have to reprogram the system.
so could I get a response, Will?
Yes, thank you. So again, what we found is that within the PTA system, there's a area where the manager would sign off approving the particular transactions. So when we looked at the transactions, our test sample, we found that the clerk was signing off as initiating and processing, and you might as well say approving the transactions, and no managerial sign off was evident. In other transactions, we noted where the clerk had did a similar processing, we saw a written signature by the manager. So again, we're saying just to establish consistency within the process, let's just establish the P and P, have the manager approve all transactions as opposed to the clerk processing them on their own, which will be evident from a third-party review without a managerial sign off.
So could somebody from the treasurer's office respond to that, to Will's remarks?
We can go back and forth. There is no place in the PTA for a manager to come in subsequent to the transaction and sign off. What they saw was management inputting transactions and their initials were shown there. So again, to have a managerial sign off post transaction would require a programming change to PTA.
Okay, well, if we can't find middle ground here, we will move on, but I can guarantee you that we will be back and we will continue to work on best practices for all departments in the county. Please proceed, Will.
Mr. Chair.
Oh, yeah, Commissioner Clean.
Thank you very much on this item, Mr. Chair, 2019-07. Is in preparation for the corrective action plan to follow, is the AG's office going to continue this conversation? And maybe in the corrective action plan, there might be a little more clarity here. Is that?
Yes, that is our plan.
Yeah, because it doesn't seem impossible at this point, but
Right.
it needs
Correct.
more conversation. Okay, I'll look for the corrective action plan. Thank you, Mr. Chair. Thank you, Madam AG.
Okay, moving right along.
Untimely removal of PTA status code 110, found on pages 20 through 22 of the report. Status code 110, withheld from forfeiture, is used by the WCTO and the PTA system to flag properties which are likely owned by government agencies that are exempt from property taxes. According to management, status code 110 is a temporary status until the property ownership is verified and changed to the appropriate status code. We requested a list of all properties coded to status code 110 during our audit scope. The WCTO provided a list of 333 parcel identification numbers along with the names and addresses of the property owners. The WCTO also asserted, excuse me, that 51 of the 333 parcels had delinquent taxes and were government owned. However, we determined that 12 of the delinquent parcels had ownership in the name of a business or an individual taxpayer. Based on our review of the 12 parcels, we concluded that the review process to analyze properties coded as 110 withheld from forfeiture is not performed in a timely manner. We also determined that 9 of the 12 parcels could have been included in the forfeiture foreclosure process due to the years the amount of delinquent taxes were owed while they were coded status 110. Failure to move properties from status code 110 to a taxable position in a timely manner may prove favorable for some delinquent taxpayers by affording them additional time since they are not being included in the forfeiture foreclosure process. Recommendation 8, a control deficiency. We recommend management within the WCTO conduct within the near term an assessment of properties coded with status code 110 to determine their taxable status. Develop policy and procedures for the manual scrubbing process, perform continuous monitoring of changes in property status codes within the PTA system, maintain documented justification, and obtain senior management's approval for changing a parcel status code to 110 withheld from forfeiture for all non-governmental entities. And finally, establish a procedure to move properties from a 110 status code to a taxable position in a timely manner. Management disagreed with the recommendation.
Can I get a comment from somebody from Treasurer's office?
Yes, this is Jean-Pierre Adams again.
Yeah.
We believe that these findings reflect a misunderstanding by the OAG of our requirements to withhold properties from foreclosures in order to avoid errors and resulting litigation. Contrary to the OAG's statement that the 110 status is used for government-owned properties only, that's not the case. What we indicated is that was how the 110 status came into being. On these particular properties that they note, where some were in an LLC name or an individual name, those are exactly the types of situations that would require us to move a property into 110 status, as the local authorities or governmental entities had not yet transferred the properties into their name, or the taxes, I should say, into their name. And so the ownership name would still show up under the former owner's name. That's exactly the type of situation that 110 was created for. In addition to that, I looked at 5 of the 9 parcels that they noted. 5 of the 9 are retired parcels. Again, that's the type of situation where we would withhold those from foreclosure. There's no indication of any wrongdoing or violation of any controls there. If a property is retired, it's generally because that parcel is subsumed by an additional parcel, a contingent parcel, and it becomes a combined parcel. And so we don't have the authority to foreclose on a parcel that no longer exists legally. As far as the timing, we wait for the locals to make corrections. We are at their will with respect to correcting the tax rolls and with respect to correcting the parcel status. So we can establish a policy, but it won't do any good if the locals aren't doing their end of it. And that, I think, is just specific to our particular function of collecting delinquent taxes that are sent over by the locals. So we are dependent upon them. We do have policies and procedures for the manual scrubbing process. The scrubbing process is included in our procedures for forfeiture and foreclosure of properties. So we didn't think it was necessary to develop a separate procedures. There's no policy that should be related to scrubbing. It's a cleanup process. So we shouldn't have a policy related to cleanup, but the process itself is included in our procedures for forfeited properties and foreclosed properties.
Well, I appreciate your comments, but I think that there's got to be some middle ground here. And when and I've been doing this for quite some time, but when the auditors go in and do an audit, it's not just about finding something bad, it's about preventing something bad happening in the future and cleaning up the process to where it just basically puts more sunshine on it, for lack of a better term. And when usually a department pushes back, it's like, so there'll be a follow-up. Why do we have to have this back and forth stuff when we could agree to find, okay, we have an issue with something, but let's find middle ground here.
Well,
And so,
unfortunately, I'm
go
sorry.
ahead. Sorry, go ahead.
I mean, we've attempted that, and unfortunately, throughout our conversations, through our explanations, the changes that have been made would be in their fact finding, but we would still have the same findings and the same recommendations. So we've attempted to work with them, and we've attempted to help them to understand our process. And it's unfortunate that there seems to be some resistance to accepting the explanation of the processes that occur in this office.
But you know what? It's a constant training for the auditors, the Auditor General, and they look at standards throughout the country. So they don't have the option of basically drilling down on some department or whatever. They have to find middle ground and put sunshine on the process. It's something that they have to go by. And I've never seen a case where the Auditor General or staff have not done that. And so I'm just trying to find, somebody in your department to agree to work with somebody in the Auditor General's department to find that middle ground. So when you have a control deficiency, that's not going to go away.
Well, we don't believe it's a control deficiency.
Well, that's what I'm looking at here.
And so when throughout this process, we've asked for the standards, we've asked for the best practices where they've identified these, and we've got nothing. It's just, well, we believe this is the case. And so if this is something that's being done nationally, if this is a standard practice, we'd more than welcome to see that, and we'd work with them on that. But we haven't had that come forward through this audit process. And so again, we will try to work with them.
And I appreciate your positive comments. And Ms. Cora, could you respond?
When we do our corrective action plan, we will work with the treasurer's office and our auditors, and we'll come to some common ground.
And I appreciate that. So we're getting there. It's a process. So anything further from any commissioners? Okay, moving right along. Thank you.
Yes, next, we also had a concern in regards to the final auction payment and deed issuance process. That's discussed on pages 22 through 24 of the audit report. During field work, we assess the processes for monitoring compliance to the General Property Tax Act guidelines for sales auction payments and property deeds issuance that were processed during 2018. Out of a population of 2,400 deeded properties, we selected a sample of 70 deeded properties to test. Per our assessment, we noted that 4 of the 70 sales auction payments appeared to have been canceled in the PTA system after the property deed was issued to the winning bidder. From our review of the PTA system, we were unable to identify the correcting entries to repulse the canceled sales payment transactions. According to Wayne County Treasurer's Office Management, the 4 sales auction payments were each a part of a separate bundle sales transaction, and the identified cancellations pertain to a parcel included in the bundle. In these cases, the entire sales transaction is required to be canceled and re-entered into the PTA system and general ledger. Upon notifying management of the missing entries, they subsequently posted the correcting entries into the PTA system. Management stated, while the entries did appear in the PTA system, the sales transactions are accurately reflected in the general ledger. The lack of established monitoring procedures to conduct a timely review of all canceled and reapplied auction payments can result to the recording of inaccurate information in PTA. This may lead one to question the validity of the transactions and system information and or the proper conveyance of the property deed. From recommendation 9, We recommend Wayne County Treasurer's Office Management establish policy and procedures for conducting annual internal reviews or transactions recorded for sales, auctions, cancellations, and reapplication of sales auction receipts in order to ensure the accuracy of the information being recorded and reported in the PTA system. Management also disagreed with this.
And I guess my thing is, can management agree to try to find middle ground with the Auditor General and her staff?
I think we have found middle ground. It was a programming error. The program was never meant to account for a change after a deed was issued and the correction was made. I will say this, the transactions show in PTA. What was missing was an accounting transaction. That's all that was missing. The cancellation, the reapply, the correction all showed in PTA. There was one little piece that didn't show up in PTA that did nothing to invalidate the transaction. And we do thank them for finding that, and we did make the correction. But we don't believe that policies and procedures need to be established because of this programming error.
Okay, could I get a response from Will?
Yes, thank you, Chair. So because there has been a correction within the PTA system, establishing the PNP may be something as simple as, okay, let's monitor these transactions over a limited time frame just to ensure that the programming error is functioning as intended.
So we're going to monitor those. Is that what you're saying for a follow-up?
Yes.
Okay. All right. Anybody else? Okay, moving right along.
Okay. We have our final area of concern, which dealt with the kiosk system and inconsistencies in processing cash overpayments. This can be found starting on page 25 of the report. The Treasurer's Office accepts tax payments at over 47 kiosk machines, which can only receive cash payments in whole dollar amounts and does not dispense change. After taxpayers' kiosk payments are accepted, payments are then imported into the PTA system, and a tax receipt is generated that indicates any overpayment will be refunded within 4 to 6 weeks. We had selected a sample of 4 days that contained 46 cash overpayments in order to determine their disposition, specifically whether a refund was issued as indicated on the PTA tax receipt. Management also indicated overpayments are system generated to be either refunded or posted to a delinquent tax year. Based on our assessment of the 46 overpayments, we determined 1 appeared to be refunded to the taxpayer of record, 5 were applied to the taxpayer's delinquent tax years, 9 in which we could not determine if the overpayments were refunded or applied to a delinquent or subsequent tax year, and then 31 were applied to the taxpayer's subsequent year's delinquent taxes coming due within the 4 to 6 week period. Consequence of this, without having any established policies and procedures specifying what action to take when cash overpayments occur using the kiosk system, has resulted in inconsistent application of the tax payments. In addition, the taxpayer may be misinformed by the information provided on the tax receipt. So for recommendation number 10, this is a 3-part recommendation where we're recommending management formalize a kiosk policy and procedures to A, establish criteria for processing cash overpayments through the kiosk machines, B, ensure procedures are implemented to review counter-type tax adjustments or refunds originating from the kiosk machine. And then finally, C, ensure a tax receipt is generated and mailed to the taxpayer for any excess payment that is not refunded but posted to a prior or subsequent tax year. And management disagreed with this recommendation.
Just wanted to add too, John, in the recommendation where we talk about review counter type tax adjustments, this is not in a transaction actually done at the counter between the clerks and the taxpayer. It's more of an internal process, even though it's a counter, it's classified as a counter type.
Correct.
Ms. Viera, would you like to respond about the
Yes,
disagreement?
okay. So on the cash overpayments through the kiosk machine, establishing the criteria for processing cash overpayments through the kiosk machines, that actually is contained in the reconciliation procedures for remote payments. And we pointed them in that direction and they thought it was insufficient, but it is there. The procedures for counter type transactions is also contained within the cashiering procedures. So it would apply to any counter type transaction, whether it's originating from a kiosk or from some other manner, such as an overpayment through a lockbox system. Those are contained, though we do have procedures already established and implemented. The tax receipts that are generated, they are mailed to the taxpayer for those counter transactions. They are already mailed to the taxpayer. Again, that's part of our cashiering procedures. What the Auditor General was looking for was a hard copy record of that tax receipt in our records, and we don't keep those. Those are digitized files. And so that is why we disagreed with the recommendation.
And could I have somebody from the Auditor General's office respond to that comment?
Well,
Ms.
Sure,
Cora?
thank you. Yes, I'll take it, Chair. So again, when we conduct the corrective action plan, we will again get an opportunity to work with the Treasurer's Office and review anything that misses, the procedures that are out there, and make another assessment of it. And then I believe, we can meet some middle ground, find some middle ground in our approach.
Well, I appreciate that because, it's like I've never seen the pushback we're getting right here. And I've never witnessed anything but going by national standards. I have great respect for our auditors and the Auditor General, and also the different departments usually come and find a middle ground. And it's like it seems to be considerable pushback from the Treasurer's Office. So I'll leave it at that.
I would like to say that there is not pushback from the Treasurer's Office. What we believe has happened is that there is a lack of understanding of our systems and how the collection of delinquent taxes actually occurs. So we would welcome working with them again to try and inform them on what our standard practices and procedures are and hopefully reach a middle ground.
And I hope so
not
too.
pushback.
Okay, but the thing of it is our auditors generals have been around, and the auditors have been around since Wayne County's been a county. And so they're not like brand new to this process. So people come and people go and so on and so forth, but the standards should be the same or improved upon continuously, and trying to find middle ground because technology changes and people change. But anyway, I was just, I'm looking forward to our follow up because this won't go away unless everybody can find the middle ground. So
I'd just like to add too, we look forward to working with the Treasurer's Office to find middle ground on these recommendations and, have from our process looking from the outside looking in.
thank you. Okay, moving right along.
Okay, so overall, a conclusion, the Wayne County Treasurer's Office has been consistently effective in meeting its goals and objectives with providing excellent customer service to Wayne County residents. Also, the establishment of taxpayer assistance programs, along with additional methods to make tax payments, has afforded taxpayers more accessibility to remit their tax payments and stay in their homes. And as stated before, a corrective action plan may be requested approximately 30 days after this report is formally received and filed by the Wayne County Commission. And that concludes our presentation.
So any further comments from the auditors or the Treasurer's Office or commissioners?
We have no further comments.
Any commissioners? Okay, The next item. Madam
Sorry,
Clerk.
Mr. Chair.
Okay,
Well, I threw my
Commissioner-
hand up and it took me a sec to get to the unmute thing.
yeah, the Commissioner Kling.
Thank you, Mr. Chair. I'd like to go back to, I believe it was the first page that Mr. Kellett showed us today. And the discussion there was about identifying properties. Yeah, the second bullet point, where people have, low to moderate tax bills under 1,500. And you were looking to get a list of those, I believe, who they are. This is all very sensitive stuff with people losing their homes and whatnot. And I believe the treasurer's office, or I remember from the beginning of the meeting, said they couldn't produce a list of those properties. It was something that didn't mesh with the PTA system. Do I have the issue correct?
May I speak? This is Jean-Pierre Adams.
Yes.
That is what the OAG stated. In actuality, they asked us to provide the information in a specific format, and we told them that we could not provide it in that format without a change. Now, if they had asked us for the residential properties with $1,500 or less owing on them, we could have provided it, and we told them that, but they wanted it in their specific format, and we couldn't do that. And so what I did in response to this was I went back and did a separate analysis of the residential properties that had less than $1,500 owing. Of those properties, and you'll see that in our response, there's there was one property that owed less than $1,500 that went to foreclosure during that period, one property. And so we believe that our outreach is effective. We believe that we don't need to further enhance that. I think everybody's familiar with the type of outreach that comes out of our office, and it's constant. And we engage taxpayers even through the pandemic on a monthly basis on what's available to them to prevent foreclosures. So like I said, we try to work with them. We offer them the information in a different format, and they insisted that they have it in their spreadsheet. And as we told them at that time, we would have to do a programming change to present it in that format. So if they wanted the information in any other type of format, we could have provided it, but they insisted that it be in that spreadsheet.
Thank you for that. I'll wait for the corrective action plan. And you noted that there was only one under 1,500 that went to foreclosure. But of course, that's over a specific time period too. So I don't know previous years. But what I'm getting at is these are very sensitive. And if the treasurer could, because this is the kind of stuff that commissioners get asked about a lot, and I want to provide accurate information out there. If we can provide information that, people that have less than $1,500 are not going to auction, that we're handling that somewhere else. I think that's good information to get out to the public, because of course, and this is not pointing fingers, but of course, when you have foreclosure, everybody gets upset with the treasurer's office, who's legally responsible for handling that. So I think the more accurate information we can get out there. So I don't know if you can report these kind of things on a semi-annual basis or something, or a report that comes out after the auction list is decided upon for the year. But I think some sort of reporting on, distribution of how much people owe and how many of those, wound up going to auction. I think it's just good information, and I think it'll help people understand what the treasurer's office is up to. Just get information out there. So I'm delighted to hear the one, but I'd like to see reporting on that on a annual or semi-annual basis. So that's my comment. Thank you for your response. Thank you, Mr. Chair.
Okay, anything further? Okay, can I get a motion to receive and file?
Move to receive.
I'm making them, I'm supporting Commissioner Dobbs' motion.
It's moved by Commissioner Dobbs, supported by Commissioner Clean. Any further discussion? All those in favor, say aye.
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 All those opposed? All those opposed? The ayes have it. Next item, Madam Clerk.
E, new business, there is none listed.
Next item.
F, such other matters as may be properly submitted before the committee.
There are none.
Public comments.
Okay, can you unmute everybody? Is anybody from the public that would like to comment? Second time, anybody from the public that would like to comment? The third and final time, anybody from the public that would like to make a comment? Okay, next item, Madam Clerk.
Adjournment.
Okay, can I get a motion to adjourn?
Move to adjourn. Support.
Wow. It's moved by Commissioner Colleen and supported by Commissioner Clark Coleman. Any discussion about adjournment? None? Okay, all those in favor?
Aye.
All those opposed? We are adjourned. Thank you so very much. Have a great day.
Thanks, Mr. Chair.